Thank you for tuning in to another edition of Pre-Market Pulsescan. Today is Wednesday, January the 17th, 2018. All right, so looking back a day or two, for those of you that missed the Rogue Money Show Tuesday Terradome, live with V, the Guerrilla Economist, and yours truly, the Algo Capitalist. That video is up on YouTube. Okay, so what do we know so far? We know that the market call on the Bitcoin futures was correct. The market did take out the prior low and is currently in free fall. As I speak to you now, as you can see here, the Bitcoin futures right here, /BTC, down almost 1,000 points right now. Broke the $10,000 mark and has gotten down to the $9,000 mark. Let's take a look at what that looks like now. In yesterday's video, I did point that out to you. It's in free fall. It's extending to another leg down. See, hence the next leg down. All right, this is the weekly. All right, contract's only been in existence for a few weeks, as you can see here, and has established itself on the downside. On the daily chart, same thing. Do you see anything bullish on this chart? Those of you who have been following this channel for some years now, you know exactly what this is. For those of you that are new to the channel, this is a bear trend. This is what a bear trend looks like. This is what a bear market looks like. All right, all of your trend lines pointing down, price accelerating down. This is an acceleration point that has been reached. Market has not made a bottom yet. It's not even in the bottoming out process. This is the beginning stage of a big pulse wave down. Right now, the market is trending. It's trending lower. It's trending down. And this is going to have a cascading effect and pull all the altcoins down with it. So you're going to see the altcoins following suit with the Bitcoin and trending lower. Of course, there are going to be some anomalies. Not every altcoin is going to be trending down, but by and large, the top 20 coins will be following suit with the Bitcoin. Bitcoin is the leader. Bitcoin is the Dow Jones of the crypto space. It's the leader. As goes the Bitcoin, as goes the altcoins. All right. So this is where we are. Hit a low so far of 9,985, and the market is still trending lower. Momentum is accelerating. All right. By some miracle, what needs to happen in order to change this and stop this and do a key reversal today? Well, the market would need to close above 12,731 in order to put it into that. Okay. The probability of that happening is slim to none. This is expanding. The ranges between the trend lines are expanding, and momentum is clearly down. All right. And you can see here 1, 2, 3, 4, 5, 6. This is the 7th day in a row. So this is a key acceleration point to the downside in the Bitcoin, and not yet ready to turn. Looking like it's locking in. It's trying to lock in on the daily chart. All right. So that's where we are right now with the Bitcoin futures. Taking a look now at gold. Gold, on the other hand, has been moving higher. Trend lines and price trading above the Kumo cloud, taking advantage of the rampage. All right. And basically trying to find a nice support for the next leg up. We could correct down toward maybe 13 20-ish, possibly, but it's looking like this one wants to continue to go higher. Bumping up against some resistance here at the 1330 level. We hit a high of 1345. Market just wants to keep this momentum going. It is locked in right now, so you're locked in. And it looks like any pullback that will come will be bought at this point. What does gold need to do to carry this over into next week? It needs to close above 13.80. As long as it can do that, momentum is on the side of gold to move prices higher. Switching over to silver. Silver is trying to mimic, but it's in the Kumo cloud. So you're going to see much more choppy price action and increasing volatility, as you can see here. There is the third bar where you've had higher highs and lower lows. All right, so that's what happens when you get into this narrow range type trading. It runs the highs and the lows. All right, so it's going nowhere. It's just running stops up and stops below. That's all it's doing. Then it comes back to the mean, to the median. All right, so you're in a trading range, and you're in the vortex of the Kumo cloud, and it doesn't look like you're going to get out of the cloud in silver until sometime in April. All right, so this is an elongated consolidation that the market has come upon. Taking a look now at the US dollar. The US dollar is looking like Bitcoin once again. Last year in 2017, and even before that, going back to 2016, I exposed that as goes the dollar, as goes Bitcoin, and vice versa. A lot of people didn't like that. Told me I didn't know what I was talking about. But the price action doesn't lie. Price does not lie. The price is the price. This chart looks exactly like Bitcoin's chart right now. You're trending lower. Trend lines and price moving and accelerating to the downside, hitting new lows. As goes the dollar, as goes Bitcoin. You don't have to like it. It is what it is. If you don't believe me, well, go ahead and buy yourself some more Bitcoin today and buy yourself some more US dollars today. And see what happens in the next couple of weeks. See if price doesn't head lower on you. All right? This is not the time to buy the dollar. This is not the time to buy the Bitcoin. What you should have been doing is taking any kind of upside profits that you made and got the heck out of the way. Let the market come down. Wait for the next buying opportunity. This too is locked in on the weekly chart. All right? It's headed lower. How much lower? Not sure. Now, with the dollar, there's a little caveat in this because, as you know, like bonds, this is a market that is precious to the Fed. They have to manipulate it. The White House does have a policy of a weaker dollar. All right, it's one of those pseudo strong dollar policies that's really a weaker dollar policy in disguise. They need the dollar to remain around the 90-ish level for import-export purposes and to help out our struggling GDP. So this is what this is. It's going to have to. They need it to stay like this. They don't want to see it crash and burn. Like I told you, 90 is the median price that the Trump administration needs. He already broke that down to you over and over again what they're trying to do. So they need this. They don't want to see this slip into the 88 handle. Remember the price targets I gave you? I said as long as the dollar is above 90, it is considered strong. If it drops below 90 into that, like the 88 handle, then the red alarm goes off because that's your gray area base floor. All right? That's a weak dollar at that point, and they really don't want to see it get into that level. Because what happens is there's this air pocket of weakness between 77 and 88. 77 is the absolute red alert That's when the dollar is crashing at that point and is in danger and in jeopardy. Can't have it get down to that 77, which is the floor of that gray area. 88 is not desirable, but they can live with it if it has to go there. But they don't want to see it there. They want to keep it around 90. All right, 90-ish. All right, so 88, red alert alarms go off. Because now you've entered into that black abyss between 88 and 77. 77 is crash alert. Economy is in grave danger if it gets back down to that level. So this is a delicate dance that they're doing with this dollar. Bearish. All right. If anything, you should be long the UDN, which is the inverse ETF of the dollar. Mad rampage coming up, and here you go. Oh, you're breaking out. All right. Okay. What else we need to look at? GDXJ. This is your gold miners. Gold miners are lifting here, which is good off these bear market lows of last year. But you're in this Kumo cloud vortex now. And this Kumo cloud extends all the way out into the summer. All right, well into the summer, to July, possibly even August. So you're looking at another just long period of price consolidation between 34 and 38 at the top side. All right. Now, here's the good news, though. If the market can get enough wind underneath of it and lift, if it can get to 38 by sometime in April, mid-April, and stay there, then you're outside of the Kumo cloud and you're considered bullish at that point, and you just need to get your trend lines up and out of the cloud by June. If you can do that, by the time you get into that July time frame, there's a possible rampage uplift that could get it to 40. All right, so you got key situations here. This is key. This has to be done if you're going to see this type of movement. So you have until you get to here. All right. If when we get to here, price can get out of the cloud. All right. Then you'll be at that 38 level. All right. Then you have this floor here, which will act as support around the 35 level. Then you got a little bit of rampage. Rampage is a good thing because then that helps your price action. This rampage that comes in mid-June can help get the prices to the $40 price target. All right. This is where you want to go. You want to go to 40. All right. And that gets you in that mid-July summer time frame. All things being equal. But the key is right here. This is the key right here. The key is April. All right. April is your key. This has to happen by April. You run out of time pretty much around the beginning of April. Because what happens is once you get out here, if you're still in the cloud around here, what happens is there's a vortex right here. This kind of setup acts as a vortex, all this right here. And it pulls prices lower, and it's like a fake floor for price action on these type of setups. And you see the Kumo cloud extending out like this. So this is a key time. This is good where we are right now, but we need for price to stabilize inside the Kumo cloud. It's okay if it just drifts, as long as it can stay in this cloud until you get to April. Then that's a good thing. Now, it can also break out before then. That's great. If it breaks out up in here, then it's already at the $40 price target, long ahead of schedule. If that happens, you don't want it to be a false breakout where price sticks its head out up here only to hit resistance and then fall back down. And then by the time you get to this time frame where you have to hit this air pocket right up in here, if price is way down here, it's going to be impossible for it to get back up and hit this air pocket. It would take a lot. It would take like breaking news or something in order for that to happen. So you don't want to see the price action below the Kumo cloud before you get to April. Even if it breaks out prior, you still don't want to see it drop back below it by the time you get to this door. This is the door right here. All right. If it happens, then it's not going to hit this door, and price is going to remain down here and drop into the vortex. And then you're looking at between 32 and 30 by the time we get to summer, and then you're just, the whole thing just falls apart. That's what you don't want to see. So right now, the mining section is setting pretty, even though it's in the Kumo cloud. It is trying to turn. Momentum has shifted off the bear market lows down here, and it's trying to move. So it's trying to use the base of December of 2017 acting as a base to get liftoff. Has a lot to overcome, folks. 40 is a strong resistance, just like 38 is a strong resistance. So I got my fingers crossed on the mining section going forward for 2018. I think it can do it. It can get up to 40. If it can get to 40, then it can get to 50. So fingers crossed on the mining section for 2018. All right, so let's take a look at HAC. As you see on the weekly, HAC is extending here. All right, from a money-making perspective, this is awesome. You see the run-up in the HAC. But for world peace standpoint, this is dreadful and frightening. What is in the works at this point for this to rise so rapidly? All right, this is a national security issue right here. All right, so you see the momentum shifted and pointed down, but it's not really accelerating. So it looks like a pullback for another bounce higher, and then you got mad rampage coming up. So with that being said, HAC needs to close above $32.53 this week to carry over that price breakout momentum for next week. This is definitely one to watch. We haven't talked about knick-knack paddywhack in a while. Let's just take a look at what the charts look like. All right, as you can see from prior videos going back to 2017, what we were looking at, and you can see prices fell apart, and tried to break out, and broke back down, and tried to break out, and it's just been an elongated flat line. It's been a trading range. Let's take a look at this range. Basically, you're trading from this point, from the dollar, up to here, to about $2.50, just shy of that. So you got about $1.50 in trading range. That's about it. The price technically is the same price it was today as it was back here in February, March of last year. So technically, we really haven't moved. You know, the same price you were then. So don't really know how this is going to play out. The last chart I showed you, if I can just blow this up a little bit bigger. Remember the last chart I showed you showing how the vortex works when you have this extended out part, and see how this one has already fallen down? So your price target now is about right here, about $1.60. All right, it's below that door. It needed to be here around that time frame, and it failed. See how it failed? All right, it made it on this one. When it got to here on this time frame right here between October the 16th, price was already up, which was good. So it didn't get stuck in this vortex down here. It made it, but then it lost it here, way before it got to the next floor. And now that floor became a ceiling because prices dropped it below it before it got here. It should have stayed above. Price should have stayed out here. Then you could have had at least a base point until you got rampage coming up until like around, you know, mid-April. But no, it's below it now. So now it's in jeopardy to go here. You're looking at a possible $1.40, $1.20 again in the net, testing these lows back here. So knick-knack, paddywhack, doesn't like it's going to do much. Doesn't look good at all. All right, so now as far as on the future side, they do have those new futures contracts. And those new futures contracts for trading the mini gold now, that's going to be MGC. All right, that's the new mini gold. All right. And then for the mini silver, this is all at the Chicago Mercantile Exchange. It's SIL. SIL is the mini silver. MGC is the mini gold. For those of you that don't know, okay? Not dealing with ICE anymore. Everybody switched over to the CME. All right, which also has the Bitcoin futures, which is BTC. Okay, let's take a look at the NASDAQ. As you can see here on the weekly, just needs to close above 66.19 and a quarter, and it will maintain the bullish outlook for next week. Still locked and loaded in there, folks. You lost it back up in here, but then you regained it. So this one's looking pretty bullish. All right, and you got mad rampage coming. So this looks like no end in sight. Looking at the Dow, pretty much the same thing. It just needs to close above 25,239, and it's locked in, and it looks like there's no end in sight. And you got mad rampage coming up as well. Let's see here. Oh, bonds. Everybody's talking about the bonds. Well, let's take a look at Berry bonds. All right. Just like I showed you yesterday, market's going to need to close above 151.14 this week if it's going to try to build some bullish momentum and rally from here. If not, then you know you're headed lower. Just waiting for these trend lines to see what they're going to do. If they're going to drop below the cloud or try to pick things up and elongate themselves for a while and then try to take advantage of rampage up in here, push higher in the cloud and get back up to possibly the 158 handle by April. So it has a long way to go. Let's see what happens. If not, then it's just going to play around down here and be below the Kumo cloud come April, and that'll put it around 153. So looking at a possible range of 150 to 153 between now and April. So we'll wait and see. There's really nothing to talk about. Yeah, it's in a bearish configuration, but it's a consolidated one. You're not really accelerating to the downside. You're not really accelerating to the upside. You're just in a range. You know, you're in a trading range. You're about where we were back in July of 2017. Technically speaking, you're pretty much right there. There's really no difference. Price action's still there. There's no difference. So we'll watch it and see. There's a lot of talk. Who's doing what? But at the end of the day, there's really nothing to talk about here. All right, let's end it with crude oil. All right, crude oil, as you can see, is taking off. Price action is above the vortex floor, which is good. Got rampage that comes in May up into July that can catapult the prices towards the $70 mark. All it needs to do this week, though, is close above $61.59. And guess what? You maintain bullish outlook and possible new highs for next week. So that's what we're watching. That's what we'll see what happens. So that being said, remember, pulsewavetrading.com. Come and learn how to trade these markets. Learn how to read the algorithms. At the end of the day, it's all about the algorithms. Learn when the algos are going to attack. You got to know when the machines, when the bots are going to come and attack. You need to know when they're going to push prices lower and when they're going to push prices higher. You need to be able to read and understand that. The only way to do that is with the pulse wave system. All right. And I need to also make it clear, and I've been getting a lot of inquiries about this. There's so many people on the internet offering trading courses. There's a lot of unlicensed professionals offering services, people who were never licensed trading professionals on Wall Street in any shape or form. Now everybody's an expert, claiming to be a trading guru, trading expert. I am not affiliated with any other entity on the internet, on YouTube, anywhere. I have no affiliation with JSNIP4, whatever he is offering. I have no affiliation with Gregory Manirino and what he's offering. They are two separate individuals, and we are not the same. We're not offering the same services. I can't speak on their services. I have not used their services. I don't know. All right. I don't know what they're doing. I have no affiliation with their whatever they're offering. All right. Two separate people. I'm my own man. It's just me. All right. So Pulse Wave Trading is not affiliated with any other entity out there. So just wanted to set that record straight. Okay. All right. With that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.